Good morning, gang. Happy Wednesday morning. All right. Love them or hate them, you got to figure what Donald Trump is doing is working. At least on an international level. Right now for us, I don't know. I really haven't seen any effects yet. Then again, I don't buy a whole bunch of Chinese shit. I don't buy a whole bunch of, actually anything. But it's kind of funny to see what happens and listen to the media, the bad reporting that comes out of the media that affects all of us. I mean, you all know who James Carville is, right? You know, he's the Democrat strategist. You know, he was Clinton's campaign manager back in the 90s, helped him get elected. You know, he's saying how bad everything is right now. But then again, this is the same guy who said Kamala Harris was going to win in a landslide. This is the same guy who said a month ago that, you know, within a month, the Republican people, the public, not Congress or anything like that, was going to completely turn on Trump. And yet here we are, and he's at his all-time high in an approval rating, okay, 52%. You know, James Carville is politics' answer to Jim Cramer. Y'all know who Jim Cramer is, right? He's the guy on CNBC who has had a job for 3 or 4 decades at this point, picking stocks. You know, he's the guy who said Enron was a great investment. He's the guy who told everybody back 20 years ago not to sell their Bear Stearns stock. 5 days later, J.P. Morgan bought him out for $2 a share. You know, he's the guy who the day after he told everybody to buy PG&E, that the stock went down some the stock went up by 75% in a day, okay, right after he told everybody to sell. And I mean, he's got more bonehead picks than you can imagine, right? You know, there's actually a mutual fund that is a contrarian fund to Cramer's comments. Whatever Cramer says to do, the fund does the opposite. Last year, about the only thing that outperformed that fund was the mutual fund that tracks Nancy Pelosi's stock picks. Okay, just giving you that. That's how wrong this guy is. That's how wrong Carville is. They can't get anything right, yet people, yes and massa, you know, will do whatever they say and then wonder why it doesn't come to fruition. The same thing has been said lately about Trump's economic policies, China in particular. Oh my God, this is going to be the worst thing ever, that, you know, this is going to destroy the American economy. People are going to die. You know, they're not going to be able to afford food anymore. This is the crap we're hearing out of the media, right? China's going to eat us for lunch. Right, okay. Give you this. China's policy has always been, for 5,000 years, China first. It's amazing how you do America first and it freaks out everybody. While China's spending money on investing in China, the United States has this bad habit of going into wars for some stupid reason that doesn't do anything for us except cost money and lives. Overnight, the Chinese yuan wound up the weakest it's been since September of 2023. And it's pushing all-time lows for weakness. You know, Trump was worried about the Chinese devaluing their currency. He doesn't have to worry about it. The market's doing that for itself, okay, as China gets weaker and weaker and weaker. Today, you're inevitably going to hear about how China is being so successful that, because they reported economic numbers yesterday, okay, or overnight, how their retail sales came in above estimates, how their industrial production came in above assets, how their fixed asset investments came in above estimates, how their property investments came in above estimates, how their unemployment beat estimates. You want to know where that all happened? In the last 2 weeks. They wound up with a huge front running of these tariffs. Oh my God, we've got to buy all this stuff before it gets expensive. Oh my God, we've got to start digging more coal in China because we're not going to be able to import it. Oh my God, we're going to have to buy whatever property we can while we can before we can't. This is what's going on. Unemployment went up. Gee, we need to hire a whole bunch of people because communist policies again. They need to have a job so they can buy Chinese products because the rest of the world's not going to. That's what literally happened. All the numbers came up, but nobody will really look into them. The media won't tell you. Now, the banks have come out and all said collectively that expect China's GDP to fall off a cliff this year, this coming year. Okay. That if they can't get into the trade markets, that they're not going to have the gross domestic product that they try to get to. They shoot for a 5% GDP. We shoot for a 2%. Okay, just giving you that as an idea. So that's how aggressive China is at exporting stuff. And the banks are collectively cutting them down to expecting, about a 3.4% GDP. That's a huge drop. Remember when it dropped under Obama and Trump said, hey, I'm going to get the GDP back over 2, and Barack Obama says, what do you have, a magic wand? And Trump went, abracadabra, there we go. This is the same plan we have now. America first, what China's been doing for 50 years. We can't buy land in China. You can't have a business in China unless China's got at least 51% ownership of it. Okay, so the Communist Party has to make the decisions because remember, everything in China is government owned. You try to do it as a capitalist, and they throw you in jail. All right. So what does it mean for us? Well, we've seen it in the stock market. All right. These wild swings, we're starting to stabilize now. But what's that going to happen? Well, a lot of our companies are joined at the hip with China. Their production is in China. Their R&D is in China. We're somewhere else. Think about any time you get on the phone and you're talking to customer service and nobody speaks English as a first language. Okay. It's not in China. It's mostly in India and Pakistan. But same thing. Trump's trying to bring this stuff home. So what does it mean for us? Are American companies going to do better? Maybe. Hopefully. But I'm going to give you something here. American companies ain't been doing all that great for 5 years. And you go, well, what do you mean? We've been doing fine. Profits are all over the place and stuff. Okay. So let's take a look at this. A company has to report its earnings. A stock price of a company is based on a company's earnings, what the company's worth. The more money the company makes, the more the company's worth. The less it makes, the less it's worth. Over the past 5 years, okay, basically as long as this channel's been going, and you'll understand why I say that in a second, the return on the S&P 500, the 500 largest companies in the United States, is 89.99%. Okay, pretty good. So you've almost doubled your money in 5 years by investing in the S&P. Got it. 89.99. Okay. Well, 62% of our GDP, this should scare you, comes from the Mag 7. All right. Your Nvidias, your Metas, your Teslas, your Apples. 7 companies in the United States make up nearly 2/3 of our GDP. That should worry you right there. But let's say you invested in the NASDAQ 100, okay? The 100 biggest companies on the NASDAQ, which are primarily tech companies. Your return for the last 5 years is 114.17%, okay? You've more than doubled your money. Cool. But let's take a look at something. What is one thing, do you want to take the risk? We all see the swings in Nvidia or Palantir or Facebook or Amazon or whoever. You know, the stocks are like this. Let's say you want to be a little more conservative, which at our age, most of us get to. Let's take a look at the returns of something simple. Gold. Boring, sit in your safe, do nothing, gold. Gold's up 118.83% in 5 years. Gold has outperformed the NASDAQ 100, the high-flying stocks, over the last 5 years. Isn't that interesting? Want to look at silver, for example? Let's look at silver over 5 years. It ain't as great, okay? Silver's ran up 84.77%. Silver's outperformed the S&P 500. It just hasn't outperformed the NASDAQ. Somebody asked me on a live stream last night what I thought, because gold's hitting an all-time high again. Gold is up over $3,300, guys. All right, it's already 10% higher than I thought it would be for the year, which is really good. Okay, I'll take that. All those of you who 5 years ago, when we started this channel, were buying gold, when we were saying buy gold, buy gold, buy silver, you're probably pretty happy with what's in the safe. I know I am, okay? I'm liking what I'm seeing. And there is no end to this. Not in the foreseeable future. India came out and said that they are going to buy American. Not wheat, not corn, gold. Interesting. What foreign countries want to buy from us right now is gold. Gold mining stocks are doing great. Gold mining companies are doing wonderful. But we look at what you and I do more than anything. And I mean, I own a few ounces of gold. No big deal. Gold's expensive, right? And even though I got it at $1,600 an ounce, okay, I'm still happy. They're about 16, 18, somewhere around there. I'm happy, but it's not like I can whip out $2,000 out of my pocket and say, hey, let's go buy 5 more ounces, $10,000. No, that doesn't happen. But I've got a little. But what we do buy is silver. Now, let's look at all of this. Silver's up $33 an ounce. It's a lot more than it was when it was 16, 18 bucks an ounce 5 years ago. Unfortunately, I was buying a bunch of it. But the ratio of silver to gold right now is really high. It's about 100 to 1. $3,300 an ounce for gold, $33 an ounce for silver, roughly. 100 to 1. Healthy prices, that should be about 80. So that tells us that either gold is way overvalued, which it might be a little bit, okay? It might be out ahead of itself. But it also tells us that silver is probably undervalued. Could silver see 40? Oh, yeah. Could silver see 50? That's very possible. You have precious metals analysts out there that said we could see $100 silver in 5 years. It's a triple from here. And I'm talking about how happy I am with the double in the last 5 years. If you look at the volatility, okay, the ups and downs of silver and gold versus the stock market, over the last 5 years, you'll see the stock market has a big dip in it and then comes back up. Silver and gold just kind of steadily go up. Low risk, better return. You can hold it, okay? It's not just a piece of paper or numbers on your computer. It's something physical. And when it comes to the point of the economy exploding, whether it's ours or China's, if it's ours, the dollar collapses, which we all know is coming, just not when. He who holds gold and silver is going to be a very happy puppy. When the Chinese economy implodes, what usually happens when companies' economies go in the toilet? People get restless. Radicals come in. I mean, if you can be more radical than a communist, and countries go to war. That's what's on the horizon for China. Who are they going to go after? They're going to go after India, they're going to go after Taiwan, or they're going to go after South Korea, Japan, the United States? We don't know. They'll probably start there in Asia, and it'll expand. The Chinese economy cannot support itself. They don't have enough, the people do not have enough money to consume enough to keep the country growing. China, communist China needs to sell their product overseas. But when Australia tells them to kick rocks about standing up to Trump, when Vietnam tells them to kick rocks, when Spain tells them to kick rocks, China's learning real fast. It's not the authoritarian power it thinks it is, that they can dictate the world economy. They may, for the next 6 months, 12 months, still have a stranglehold on cheap junk that they produce. But the stuff that we really need, we don't get from China. The stuff that they really need, the Chinese, they get from the rest of the world. Oil, food. China's in trouble. The yuan, the value of the yuan, is showing you that. What Trump is doing is brilliant. We may have to take one for the team in the short haul. But those of us who hold gold and silver not only are going to make out like bandits, okay, fine. So we have to pay a little bit more for the crap we buy at Walmart. But remember what gold and silver is. It's a way to protect your wealth. You've all heard the stories. Buy a suit in the 1920s. Buy a car in the 1960s. And what cost you one gold piece in the 1920s to buy a top-end suit still cost you one gold piece in the 2020s to buy a top-end suit. Or what used to cost you 10 gold coins in 1960 to buy a brand new car cost you 10 gold coins to buy a brand new car today. What do you think is going to happen in 5 years? Let's say the price of everything doubles in 5 years. But if you own gold and silver, 5 years from now, you're still going to be paying the same prices today because you got that little piece of metal in your hand that's worth a hell of a lot more than a miserable piece of paper that keeps getting worse and worse and worse. And when China collapses, at least their economic policy collapses their country, collapses their economy, and they go to war. And inevitably we get involved in it because the U.S. loves getting involved in other countries' wars. That's going to hurt us even more. And you can sit back and go, at least I can still afford my bills. I can afford to buy groceries, because when all that stuff gets massively expensive, because economic collapses are a ripple effect around the world. The Great Depression started because of the stock market collapse in New York City, right? And it spread around the world. When China collapses, we're going to see the same thing. Be prepared for this. If you can afford gold, maybe buy some. But silver's still here on sale. Silver's undervalued. Silver's cheaper. Okay, $33 an ounce. You're going to go buy it with a premium or whatever. Like I said, a 15% premium. All right, so what is that? $4.50. You're going to pay $38, $37 for silver. If you can find it at that price, it's a deal. Because when we see $50 silver or $100 silver, you're going to look back and say, thank God I bought it when I did. Just like all of us that bought it back 5 years ago when it was $18. And people are like, oh, it's so expensive. And it went over 20. I'm going to wait till it pulls back to 20. And they're still waiting. Okay. As much as we'd all like to get in a time machine and go back 5 years. So, of course, if you went in a time machine and went back 5 years, Bitcoin's up, 82,000%. Great. But again, when the world collapses, if there is no power, there is no Bitcoin. Gold and silver, physical, hold it. If you don't hold it, you don't own it. You got to have some. And as I've said to people many, 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 many times, in this type of economy, 20% of your liquid assets should be in gold and silver. Have a good morning. Pinball out.